All right. Good morning, everyone. We are on day 4 of quarantine, and I have lost track of how many podcasts we've done, but we're talking to Genevieve Roch-Decter, the CEO and co-founder of Grit Capital. And if you don't know Grit Capital, you should definitely check them out. I found out about them on Instagram, which is not where you typically find out about investor relations and capital firms, but they have an awesome and very, very educational and informative Instagram page at Grit Capital. And we're sitting down with Genevieve today to learn more about really what's going on in Toronto right now, what's going on with TSX listed companies, and to have a conversation about companies kind of outside of the mining space, because I know we've been focused a lot on that the last couple of days, and there are a lot other things going on. So without further ado, Genevieve, thanks for sitting down with me today.
Yeah, thanks for having me.
So you, like me, are currently locked in your apartment in Vancouver, although we're on other sides of the city. What have you been doing to keep yourself busy over the last week or so?
Well, it's funny. Our firm couldn't be busier right now. And I think that that's because we actually set up our business from the get-go to be half online. So you're right. Like, we live and breathe on social media, and so do our investors. Investors into our clients' companies, not investors in Grit Capital. But there's investment advisors, if you can believe it. Like, even the older girls and guys out there in their 60s and managing money are now going on Instagram. Like, I've got, Canaccord brokers following what we're doing. I've got a couple of Canada's billionaires following what we're doing. And now more than ever, I think, given this quarantine period, it's going to allow people the time to know and learn how to use these platforms, whether it's Zoom, whether it's Instagram, and just get on there. So our business was set up from the get-go. We've never had an office, and we don't have problems with technology. And half of our services to our clients are to digitally market them online. So
yeah, I think you make a really interesting point about this. I guess this shift in the source of both capital and information, where it's coming from. I mean, we're a very similar business to you. We do 99% of our work online. I worked out of my living room for the first year and a half of running Resource Insider. And we found that when we go into deals, we are very, very often bringing in far more capital than some of the big name brand banks there, and often multiple times what they're bringing in. And I think that's a reflection of what's going on in society in general, but also a reflection of people, I guess, perhaps being a little frustrated or a little disenchanted with the traditional model and looking for alternatives out there for information and opportunities.
yeah, I think you're completely right. I think also the capital sources, we were talking about this morning, small cap funds on Bay Street are disappearing. That's a function of two things. One, so much more money is moving to passively managed funds and ETFs. So the necessity for active managers is going down. And two, I think also a lot of these portfolio managers are getting older and looking to retire. So you've seen mergers like Barometer and Roundtable, two kind of small cap managers in Canada. They just merged a couple weeks back. You've seen some layoffs of some big portfolio managers even before this downturn. So active money is moving out of professionally managed hands, and people are being empowered to find their own opportunities. And thankfully, the internet has democratized that process. So you can find, whether it's, we were talking about this earlier, crowdfunding opportunities. You can fund startup companies, venture on the internet. Regulation A in the US through the Jobs Act has allowed companies to raise up to $75 million from unaccredited investors. And I think just like people are spending so much more time on their iPhones. And so the attention that you can get from these people on their phones and like owning the mind share, that's where you want to be. I don't think people are reading research reports as much as they used to. We were talking about this as well, analyst reports. Like, I managed money for 8 years. I barely read any of those reports. People want fast information, and they want to consume it in a digestible, bite-sized way. So you have to be very clever at how you structure information and content, make it entertaining and valuable at the same time.
Yeah, I totally agree with that. And you guys were the first ones I saw really that I think really leveraged social media effectively for, I'll call it, Canadian capital markets. And since that time, I've seen 5 or 6 other groups come out with similar products, I guess we'll say. And I think very few of them are doing it as well as you are, or I actually think very few of them are doing it well at all. And I think the way you guys have been able to very effectively and efficiently encapsulate a message and the value of the value proposition of a company, whilst also making it like fun and entertaining and kind of funny a lot of the time. It's really well done. And I should have asked this question at the beginning, but can you give us like the 30,000 foot view of what Grit actually is and what you guys do?
Yeah, so thanks for that. Grit is an investor relations capital market advisory firm based in Canada. So we're 4 of us. I'm in Vancouver. My business partner Nicole is in Toronto, and then we've got 2 others that work with us: a team manager and then a full-time marketing person. So essentially, what we do in a nutshell is we tell the right story to the right people. What does that mean? So we do physical marketing. So back before Corona, we would put CEOs and companies on roadshows. So we put them in front of investors, whether that's hedge fund managers, whether that's small cap funds like we were describing, family offices, retail brokers, high net worth individuals. I spent the better part of 8 or 9 years as a portfolio manager myself. So I already had established relationships with all of these money managers. They're my friends essentially. And so when we launched Grit Capital 4 years ago, we already kind of had a baked in audience where we could bring companies to meet these investors. So that's the physical side. On the digital side, you're completely right. We started an Instagram account 4 years ago, literally for shits and giggles. Like it was not somewhere I realized like complete freedom. Like I can say whatever I want about financial markets, and I can craft it in a way that I would like to receive that message. Like I remember Canaccord used to write this note called the morning coffee or the morning brew. I'm not sure if they still do it, but it was like an
Yeah,
excellent, like
yeah, they
just
still do it. They
bite-sized.
still do it.
Yeah, so like that was kind of the genesis of my letter was like, let's make this fun. This is small caps. Like, why does it have to be serious? It does not have to be serious. We're serious about our clients and our businesses, but the way we talk about them does not have to be like we're in a freaking Goldman Sachs meeting on Fifth Avenue. Like because when I manage money, I found that part of the business where everybody's trying to be so serious, not conducive to like information sharing and understanding of businesses. I found it actually shackling, if you will.
Yeah, well, okay, I think, and we're getting into the weeds on this, so I don't know how interesting listeners at home find this, but you know what? Too bad, it's my podcast. So I think what's happening is there's the democratization of finance, which is going on right now. And that's the thing that I am most excited about, because what's happening is you're eliminating the layers and layers and layers of middlemen that are clipping fees after fees after fees before the money goes from the dentist in Missouri who put it into some sort of mutual fund, and it goes through all these opaque channels before it actually gets into a company's bank account where they can actually use it. And that's all gone now, or in many cases, it's all gone. And people at home who have an interest in finance, an interest in investing, are able to invest directly into companies that they would never have been able to get into before, never even probably heard about. And they can do it relatively easily with filling out 5 minutes of paperwork and maybe reading a few articles and educating themselves on that. That's what we're focused on at Resource Insider, and we've seen tremendous appetite for that. And I think what you guys are doing is really good in terms of providing an education for people in that position as well who want to learn more about these deals. So it's I think it's a really exciting time. And I also think, to your point, that the over seriousness is something people in our generation are a little more fed up with. I think we're used to seeing our public figures be quite candid, whether they're, a fucking Kardashian, which is, it is what it is, or like someone like Anthony Bourdain, who had a huge amount of fame, I think really just because he was a very authentic person that went out there and was himself and spoke directly and honestly and informatively about what he saw in the world. And I think we kind of came up on getting our information from people like that. and the overly rigid formalities that would have been expected even 10 years ago, I think are kind of falling away. I don't know what your thoughts are on that ramble.
I completely agree. I think that kind of over polished, over rehearsed, whether it's a politician or, you know, a CEO of a company, we don't trust that as much anymore. We trust because we've been raised, like you said, in this reality world, reality television. Even, you know, the politics in the US, Trump is a reality show in himself.
Yeah,
People,
yeah, yeah.
like, they are attracted to that because it's real. Like, to be able to showcase your successes but your failures, to be right but also be wrong, like lay it out on the table. Like, I actually saw, so Silicon Valley, there's a guy in Silicon Valley who wrote this article about like the best like 100 pitch decks in Silicon Valley, and then like the best like pitches in Silicon Valley. And one of them that was actually like very popular was when a CEO comes and does his presentation and actually right off the bat explains to you why you shouldn't invest in his company. Like, literally says, these are the 5 reasons why you should not look at my company or invest in it. Like, these are the things that are wrong with it. And what that does is actually disarms the investor on the other side of the table, because instead of the entire time they're being pitched to, they're trying to figure out what's wrong with the company. He just told you. So now you can focus on what's actually right with the company. Why would I actually want to invest in the company? Because if you go on Bay Street, like I managed money for 8 years, every single pitch deck looks so awesome. You know, all of the projections look amazing, but none of that actually ever comes true. So like, how refreshing is it to just like give the straight goods, you know? And I think your newsletter probably does a good job doing that, because you have a voice, a neutral, non-biased voice, where you're not being, you know, really paid by anybody to pick the companies that you showcase.
No, yeah, and that's right. And I think that's where our business model is, I think I'm going to say, superior in a time where people have very, very high expectations of transparency, and the fact that we're very aligned with our subscribers, that we're not getting finder's fees or commissions, that I'm investing alongside them, and if it works, we make money, and if it doesn't, well, we don't, and that's how it goes. So we should start talking about what I actually asked you to be on here today for, and that's, what do you see going on now today in Canadian capital markets? How are you managing your positions, portfolios, working with your clients, and I guess what are your plans for the coming year on how to best manage a crisis that is changing very fast, and we have very little idea, or there's a lot of opacity about what's going on?
Yeah, that's a very big, loaded
It's a
question.
very long question.
I think right off the bat, you know, I can just speak from the sectors that we've been working with. So cannabis has been a big one. So it's been a huge winner over the last 3 years in terms of, you know, companies that have gone public and opportunities to have clients in the space. But now we've have a come to Jesus moment where, you know, a lot of these companies are taking, you know, massive write downs, and, you know, executives are getting fired, et cetera, et cetera. No more financings are happening. There's probably going to be a bunch of M&A. There has been a bit of that, but you're not going to see that hype is over. So for the small cap market in Canada, for the investment banks, for the dealers, like, that's goodbye. That's in the past. So we've got a few clients left in that space, but we've stopped taking clients in cannabis over the last 8 months. I've said no to probably 24 companies that wanted to work with us, just because I knew I couldn't provide the services. No investors wanted to meet with new companies. So that's that. Esports has been a weird one. You know, there was a lot of hype out of the gate because it is such a big market. You know, it's bigger than Hollywood. It's bigger than the music industry. And right now, especially as people are staying at home, we just posted this morning on Instagram all these celebrities that are playing esports, and it's booming in this time. But from a have any companies actually made people money standpoint on Bay Street, that hasn't happened yet. So people are skeptical on esports right now. Until you get a winner in that space, I don't think anyone's going to be coming out with new things there. Fintech is huge. We work with Mogo Financial. We like what they're doing. They're the leader in fintech in Canada. It's got about 1 million members. So I think that's an area where you're going to see more and more companies, especially, again, given this time, whether it's challenger banks online, consumer loans, iBanking, et cetera. I think this is going to continue to grow. Mining, we started getting into the space. And that's predominantly just because we recently, before the last little while, had a run on gold, and gold was moving up. Lots of financings were getting done. Eric Sprott was writing a lot of checks into deals, and Bay Street was getting excited about it again. So we started looking into that area, and we've got 2 clients now in the space. But you know what? We play in the small cap arena, and right now risk is off. And like you and I were just discussing, like, why are you buying a small cap stock when you can buy a large cap that just went on sale 40%? And you can get 8% yield on Scotiabank. Like, that's just crazy, right? So
Yeah.
I think it's going to be risk off for now, but like doesn't change the fact that like we still have to keep working. We still have to keep doing stuff. We still have to keep adding value, because these companies are going to continue to chug along.
Yeah, it's an interesting time, and we've been, having some long days and nights here trying to figure out what to do best and how to advise our members. And, we're really going through a period of chaos right now. And I think in times like this, the priority is liquidity, right? Everybody wants to have cash. Everyone wants to have money because there is no certainty. There is no safe asset. Everything is so ambiguous right now. It's chaotic. But I do think as the dust settles with this, and if you haven't listened to it already, I highly recommend you check out the podcast I did. I think it was yesterday with Marcel de Groot, and he talks a bit about this at length, that this cannot go on forever, even insofar that, human beings can't remain in a level of stress and isolation indefinitely. And even if coronavirus continues to exist, which it probably will for the foreseeable future, people are going to start going outside. People are going to go back to work. People are going to have seen some or maybe many of their friends or colleagues infected and come out of it okay, and things will start to pick up again. And if I had to guess, I would guess that's 5 to 6 months out, but that's really just speculation. But I think when we hit that point, we're going to go from liquidity to people wanting safety, and people are going to want to put money into things that are safe. They're not, risk is off, as you said, I think, for the foreseeable future. But like the safety stage, to me, the only logical investment there is going to be gold. And I think we're going to see capital pile back into gold over the coming 6 months. Someone tell me if I'm right or wrong then, but that's what I'm preparing my portfolio for. And I would recommend that anyone out there has a look at physical gold and also the safe gold equities, the silver Wheatons, the Wheaton Preciouses rather, the Franco Nevadas, the Sandstorm Golds, the Onico Eagles, things that aren't going anywhere and are now on sale for half of what they were just weeks ago. Do you guys have any thoughts on mining or gold, or where you might be positioning yourselves or taking on clients?
Yeah, I mean, gold's been very frustrating. I think everybody in the gold space is like, okay, you have the perfect scenario for gold to work, and it doesn't work. And the reason why is people are treating it as cash. They just want liquidity, so they're selling it, right? So I think that's the frustrating point with gold. I agree with most of what you said, but I think you should, like, everybody should remember that just as fast as fear takes over, so does greed. And I remember when I started managing money back in 2008, helping on a small cap fund, that didn't last for that long. Once we got things sorted out, liquidity started coming in the system. And especially in the mining space, there started to be all these private placements, tons of private placements. And our fund managing at that time went deeper and away from all the private placements. We did well, we started rebounding, and our fund ended up going up 175%. In this era where information moves super fast and you can whipsaw history, I think you think about like what are NBC going to be talking about in 3 months? Like we go from looking backwards to forward very quickly. So when earnings start coming out and they look like shit for all of these companies globally, no one's going to be talking about that anymore. They're going to be going like, wow, that was a one-time blow up to the whole global supply chain and logistics and et cetera, et cetera. But then we're going to be talking about the recovery. And when you start talking about the recovery and the green shoots, that's when greed comes back in. So I agree with you. It's going to be tough times for a little here, but like, it's not going to be like this forever. And so There's a famous study that looked back at 100 years, and if you missed out on 9 days in the stock market, if you took your money out, you lost out on 50% of the returns. So I would be not looking to take money out here, but I would be doing like what you suggest. I would be high grading. So on days when the market's going up, I would be taking profits on some more speculative stuff that you don't understand or don't know, and maybe cycling into larger cap things that might have a faster rebound. And be buying those on down days, perhaps.
So I've been talking to different people about that, and that's an interesting perspective because, so do you think some people are pulling out all their cash now and they're waiting for, I guess, what they consider the worst of it to start redeploying? Do you think, are you kind of against that mentality and thinking you want to have your money in there right now and, kind of suffer the ups and downs, but at least have it in there for when that sort of run comes?
Nobody in the world can call the tops and the bottoms. And I've been in the asset management business with my family for over 20 years. And my father, he managed about 600 million in client assets. He has 300 clients that are some of Canada's highest net worth individuals. And he never, ever recommends taking capital out of the market in times like this. It's always a high grading exercise. Move from small speculative to mid cap large, like just go up the value chain. But don't take money out of the market because you never know and you don't want to miss out on the returns. Another thing you can do is you can average into the market, right? So you deploy some capital. And then drips are great, dividend reinvestment plans. So if you buy Scotiabank at 8% yield today and you're getting dividends on that and you have your drip program on, well, guess what? You're buying Scotiabank, you're averaging in over this volatile period. So you're getting prices all the way through, up, down. But like, do you think 2 years from now, we're going to be sitting here in the market? I don't particularly think so. I think we're going to be higher than we are today. So yeah, I think you have to take a long view on a lot of this. And don't think that if it was that easy to call the tops and bottoms, then these hedge fund managers would be, having returns year over year. But like the hedge fund world never stay on top because you can't call these things. You can't call.
It's true. It's, I guess, when the most sort of well-financed and sophisticated investors in the world are routinely getting it wrong. So, those are not the people you want to be competing against and trying to beat.
Exactly.
All right. Well, Genevieve, thank you very much for taking a few minutes out of your day and chatting. Is there anything else that you think our listeners should know about what's going on today, or perhaps Grit Capital in general? Where can they check you guys out or learn more about what you're doing?
I would say download Instagram at GritCap. Follow us on there. We're doing a daily show every day too. Tune in, get to know us. We like to highlight new sectors. So check us out and, become friends.
Yeah, I would echo that. I've been talking to a lot of my subscribers about getting Instagram, and most of them are old and they're very, very resistant to it. But I think you're going to find over the coming years that a lot more information is going to be available on the Instagrams and Twitters, and who knows what else is going to be coming down the pipeline. So get on top of it. All right. Thanks a lot, Genevieve.
Okay. Thank you so much.
Have a good day.